Yeah, I'm losing my
dive
edge.
into stocks specifically as this COVID vaccine news is finding it through all different asset classes. The first place a lot of people go to is stocks. And I think that was the knee-jerk reaction as the potential for COVID vaccine has been making waves here early in the trading week. And I wanted to, hopefully we can land at some potential strategy around how to trade this if this news is realized over the next weeks and months, if maybe this is a head fake and we dip back into a little bit of that pandemic trade that we've seen from March until now. Before arriving at that strategy, I just want to outline what's going on. And thankfully, the small exchange has two products, SM75 and STIX, that outline the shifts that you're seeing in equity sectors very well, because SM75 will dip into exactly what sectors and stocks are in there, but it's a broad market. It's got energies, industrials, financials, I'm missing one more, materials and tech. Now the STIX product is tech exclusively because most people know, you've caught on to the trend since 2010 or 2015 until now, technology has become the biggest weight in broad market indices. It's become the most talked about stocks in the last few years. And since March, it's been the highest flying stocks because what do people rely on amid a pandemic? Technology, and not so much energies or airlines or anything like that. And so today, with the potential COVID vaccine playing through the market, it started off about 5:30, 5:45 Central Time here. You see how it's shaking out, and it's shaking out like this, almost 5% higher in SM75, that broad market, and pretty much no activity in technology wrapped around unchanged. And you look at the top performers, Pete, maybe you can illuminate what NOV, SLB, and HAL are here for SM75.
Right. And, that's the energy sector that has been struggling so hard for so long, starting to normalize. And I don't know if I actually like that, because that implies that they were I mean, they're priced where they're priced. But I think the inability and the reallocation, it doesn't take much at the divergences we're seeing to see some dramatic moves. And I think you make a great point, though, Frank. We're seeing that. I mean, when the herd runs out, it always runs through a very narrow door. And we're seeing a little bit of that herd fighting, trying to get through a narrow door. In other words, of either covering shorts or lacking this exposure. So we're seeing that normalization a little bit. And, these points that we're starting to do this from, and you've mentioned this, are points that were interesting levels on the way down, but we haven't seen in probably 2 or 3 months. So I think that is why we look. It's part of the reason why we like to be able to pick different segments within the equities market and be able to, find those opportunities.
Well, we've seen some shit like from March until, call it maybe July or August, Pete. It was like a one-way street there. Right. It was technology beating up energy and industrials every single day. That was the only path there. Now in August and October here, and now we're into November, there was like two-sidedness finally. There was like some days where airlines and energies and industrial were like, oh man, okay, we're going to beat up on technology a little bit. And then it was reversed though. They never really made up any long-term ground. Today is the first day where it's like a huge move. It can't be understated. 5% divergence is probably a top 2 or 3 move since these products were created. And then Pete, I want to dive a little bit even further into these names. You look at the top performers in the technology sector, Expedia, Disney, and Uber. Those are not, Zoom, Grubhub, or any of those companies that are, these are tech companies that are technologies. We feel they're technologies. Even someone might say, hey, Disney has existed for decades. Why is that a technology? Well, they have, Disney Plus. They've pivoted a lot of their company to technology. But in the technology sphere, Pete, the outperformers there are companies that have a big stake in those other sectors there. And I want to dive a little bit deeper into what's around here, because these are the stocks that make up the SM75, and you can see a nice even distribution from technology over here to industrials, energies, financials, and materials. That's accounted for the underperformance in SM75 this whole year. And we'll crunch some numbers on that in a second. But you look at this, Pete, those outperformers that we just showed are all here in energy. Other big outperformers today in industrials, American Airlines up huge, United Airlines also up huge here today. And then you move on to the STIX, which you have four sectors here, similar sector distribution, even through the different sectors. But this is information technology, retail technology, media technology, and then biotechnology. So they're all tech stocks. And you can see that the worst performers in that STIX actually range all the different sectors in there. Right. BIIB is actually a biotech. W Wayfair there is retail technology, and I think Zillow is a media technology here. And so it's this case of SM75, the broad equity market, everything that's not tech performing well, and then within technology here, to find some outperformers as the bulk of these sectors are underperforming. Even this COVID vaccine news, Pete, should potentially
create winners and losers. Yes.
Well, you'd think first your reaction would be, oh, biotech. This is great for biotech. Right. This is great for pharmaceuticals and biotechnology. But guess what? It does create those winners and losers. Right. Maybe you can speak a little bit to that. Yeah, the worst performer in STIX is biotechnology here today. Why is that?
You know what? I think just for that very reason is that the idea of, and this is one of the great things of building an index and not being reliant on, and I think that's with Disney. Why is Disney a tech company? Well, 40 years ago, we all stood in line and used pay tickets to get a ride. We know it's a very different company. We've been able, building new indices, to be able to account for what that company is now too. But I think within the world of biotechnology, you're always going to see a share of winners and losers as they race towards different parts of and what I love having biotech in tech, it truly is cutting edge, and it truly is a unique flavor of tech versus some other pieces we get, but it is probably one of the most dynamic. And if you think about it, it is always on. When you talk about tech in terms of what's new, what is evolving, what is the latest iteration, this is a piece that will always be on that crest of riding that. So, you know what? And we will see the winners and losers. Sometimes we'll see biotechnology as that net on change because we're getting dramatic pushes and pulls. But in terms of consistency of that exposure, I think it's really important. It really does give you, we didn't build STIX just to be a clone of something. We don't build anything at Smalls to be a clone of anything. So this really speaks to that opportunity around it. And what I think too, Frankie, is we'll see in 2 months, 3 months, we'll see this shuffling of the deck throughout these names change. Yeah. And that will be an interesting trade in and of itself.
Yeah, it's interesting here that something that is broadly seen as good for healthcare, pharmaceutical stocks, whatever, actually is seeing some of the worst performance because it's good for them if they have that vaccine, right? But these people, these BIIBs, the Modernas and Regenerons, all these companies that got bid up because they might have the vaccine, right, they're seeing that release. And then you go to these other sectors, all these companies that got bid up like Wayfair, like Shopify and PayPal, because, oh, wow, people are going to depend on this for the foreseeable future. Well, it looks like the foreseeable future is going to have a date pretty soon. And they're starting to bake out some of that. I mean, you look at the underperformers here in SM75, it's not green across the board. It's funny, a market that's up almost 5%, that's really hard to come by for a broad equity index. Right. 5% still has underperformers. And guess what, Pete? Every single one of the underperformers is in the technology sphere of SM75, all of them in this column here. So it'll be interesting to see how this plays out. There's still a ton of different distance here between technology and SM75. The news hits here in March that, wow, this is a little bit more out of control than we thought. And companies are going to have to shutter their offices and really figure out how to adapt to this. And since then, Pete, technology stocks have tacked on almost doubling their value from these March lows. And guess what? These broad market indices that have energy stocks and industrials, Pete, they fought back to barely get to unchanged. So, yes. I mean, this might be just the tip of the iceberg here. If this COVID vaccine today, kicking off the week this morning, it's just talk of potential, and this could work, and this could bring companies back into their offices. It could bring airlines back to their prior dominance over different fields and give some of that back. Look at this. I mean, this is a big daily move here. technology giving ground to the rest of the stock market. But Pete, a lot of ground to cover just to get back to the start of the year, whether you're looking at percentages or looking at the pairs. So stocks reacting to the potential for a COVID vaccine, if that potential is realized, I think there's a lot of downside that could be seen in technology and a lot of upside that could be seen in some of these beat up markets like energies and industrials.